Good morning, good afternoon, and good evening, everyone. Welcome to the launch of the joint Geneva Association and Insurance Development Forum paper titled Insurance Development in Emerging Markets, the Role of Public Policy and Regulation. My name is Noordhoek, Director of Public Policy and Regulation at the Geneva Association, and I will moderate today's session. Thank you all for tuning in. This webinar will last for roughly 1 hour and 15 minutes. I will start with a few housekeeping remarks to familiarize you with the Q&A function of Zoom. And during the following 10 to 12 minutes, I will present the key messages of our paper. And following that, we will move into our panel to dive deeper in some of the issues and possible solutions that were identified in the paper. So let's move on to Zoom housekeeping. I guess we're all familiar with Zoom after 2 years of pandemic. But here a quick reminder to make yourself familiar with Zoom and make sure you have a smooth experience. Participants are in the audience mode in Zoom. This means that you do not have the ability to turn on your video or your microphone. So we will not see you and not hear you. But you are all, however, very much encouraged to participate by asking questions to our panel. And this can be done through the Q&A function, which you will see pointed out here on the screen. Please make sure you use the Q&A function and not the chat function, because the chat is not regularly monitored. As I said, we welcome you to, or encourage you to ask questions. We don't have a dedicated Q&A session at the end. We will take questions throughout the session. So please be active and ask your questions. Note that the session is being recorded as well. And in case you have any technical issues, please reach out to my colleagues, Maria and Casey at our events team at events@genevaassociation.org. Next slide, please. First of all, I would like to take this opportunity to thank the co-author, Bill Marcoux of the IDF and Kayu Wishans of the Geneva Association, as well as all contributors, including interviewees at insurers, regulators, and international institutions such as the OECD and ADB, as well as the Access to Insurance Initiative for making this paper possible. For more details on our findings and country-specific case studies and recommendations, please visit the website of the Geneva Association or the Insurance Development Forum as pointed out here on the slide. Next slide, please. Let's just spend a minute on the paper's objectives. And we have recently been asked why it is relevant for the Geneva Association to look into the role of public policy and regulation in insurance market development. And I think the reasons for that are straightforward and, in my view, rather convincing. Over the past 10 years, economies of many emerging markets have grown significantly. And during the same period, insurance markets in those countries have also experienced growth. However, this growth was primarily driven by expanding middle-class populations and strong economic growth. Despite this growth, insurance penetration in the markets in scope of this study only reaches about 35% of that of mature markets. And although the gap between insurance penetration in the markets in scope of this study and the average OECD countries narrowed slightly in the years from 2005 to 2020, the gap remains significant. And those protection gaps expose individuals to falling back into poverty and business into ruin should misfortune happen. Now, the reasons for protection gaps are varied. And to fully understand the drivers of underinsurance in emerging markets, it is important to also understand the interaction between public policy and insurance regulation and market development. And that is precisely what we try to do in this paper. Next slide, please. The paper is based on a literature study complemented with interviews and surveys among insurance executives, insurance associations, and regulators in 14 countries across Latin America, Africa, and Asia. The interview questions revolved around themes such as general barriers to insurance market development, specificities of the insurance regulatory framework, government policies, and the legal frameworks in place. Let us now briefly dive into some of the main findings of our paper, starting with key driving factors for insurance market development. Next slide, please. And the first item here is political prioritization of insurance. In markets where the insurance sector, including regulatory supervisory functions, are prioritized on political or policymaker level, we found that market development was taken more seriously. In those markets, the regulatory bodies were equipped with a market development mandate, besides the policyholder protection or financial stability mandate. Well, next is effective insurance regulation. And as we all know, regulators and supervisors play a key role in market development. We found these institutions across our markets to be ambitious and noticed many reform initiatives, including on implementing risk-based capital frameworks, microinsurance regulation, and digitalization initiatives. In a number of countries, however, supervisors are confronted with a lack of political support and a general underestimation at political and policymaker level of the role insurance can play in making societies resilient, as well as the role of insurance in supporting economic activities. And as a result, regulators and supervisors do not always get the resources they need in order to carry out their tasks and activities. And this is not only in terms of financial means, but also in terms of human resources, or more broadly, in terms of legal reforms or amendments that need to be made in order to move forward with reforms. Another issue that is really frequently mentioned is our affordability issues and financial literacy, as well as risk awareness. And this should not come as a surprise to be a key demand-side factor in emerging markets. Many of the markets in scope have launched initiatives to address these key drivers, such as premium subsidies and financial education programs, with mixed success. In terms of financial literacy, we found that countries in which insurers, regulators, and decision makers in relevant ministries work together to create long-term programs, such as embedding financial education in school curriculums, were most successful. And then there are government laws and policies, and they are very broad and varied, so we'll just highlight a few here, whereby market access is an important one. Policyholders and local insurers benefit from market access frameworks that allow for access to underwriting expertise and financial strength of international insurers. This is also true for the reinsurance industry, which helps to spread the financial impact of a disaster among many carriers outside the national economy. Now, only 3 of the markets in scope of our paper had no market barriers or market access barriers at all. Barriers observed in other markets range from compulsory cessions to asset localization requirements, as well as foreign ownership restrictions. And then there is part of the sort of the regulatory part as well, mandatory insurance, which is considered a strong tool for enhancing risk awareness, but is absent in most of the countries that were in scope of this paper, or there where it exists, there is very much a lack of enforcement. Now turning to the regulatory mandate, and I think we will spend a significant amount of time later on today on this very topic. Equipping the insurance, regulatory and supervisory bodies with a market development mandate is a powerful instrument to help spur the insurance market. The report shows examples for markets that have done well in this regard. In most markets in scope, however, this mandate does not exist or only on paper. And in some markets, feedback we received was that market development was seen to conflict with other regulatory mandates, such as consumer protection. Then we have insurance regulation, and particularly rate and form regulation. Markets that have taken a more liberal stance to rate and product regulation have enabled insurers to become more innovative and allowed them to more swiftly react to changing market needs. Many markets do still have tight rate and form regulation in place, however. Lastly, there is microinsurance regulation, and we found that dedicated regulatory frameworks for microinsurance can help insurance reach the most vulnerable. Such frameworks aim to incentivize the provision of microinsurance, which, considering the low premiums and high cost of distribution, would be less feasible under standard insurance regulatory frameworks. However, success has been mixed, as some microinsurance regulatory frameworks only address part of the issue, for example, lower capital requirements or a different licensing scheme. But other issues, such as allowing for new and innovative distribution channels, are not always solved, and that leaves many insurers that want to offer such products very often with prohibitively high, what they call last mile distribution costs, and that in turn reduces the incentives to offer such products. Now let's turn to the recommendations. And I think it is fair to say there is no silver bullet in closing the protection gaps. Considering the findings of the report, we present a number of recommendations for either, on the one hand, policymakers, but also insurance regulators and supervisors, as well as insurers themselves. Let us start with policymakers. Insurers, regulators, and policymakers need to cooperate more closely to enhance the understanding of the role of insurance in societies, develop conducive public policy and regulation, enabling insurers, making societies more resilient. Policymakers and legislators should consider giving the institutions tasked with insurance regulation and supervision a clear market development mandate and equip them with the resources needed to fulfill this mandate. And to reap the benefits of global markets and risk diversification, overly burdensome market access barriers should be removed. As the lack of financial knowledge is a core demand-side barrier, which in turn negatively affects trust, improving financial literacy should be a top priority at government level. Now let's turn to regulators for a moment. Regulators understand the value of insurance and well-functioning insurance markets, and also have close connections with relevant policymakers at key ministries, for example, and that allows them to play an active role in enhancing policymakers' understanding of the role and the value insurance can play in helping their societies forward. Insurers would like to innovate and deliver products consumers need in a changing environment. It is therefore important that product regulation is relaxed, and there where not removed, approval times are shortened. And to address the high last mile cost of distributing insurance products, preventing them from reaching the most vulnerable, particularly in rural areas, regulators should enable digital and alternative forms of distribution. And I think the COVID pandemic has shown us all that this is possible, and quite swiftly, actually. Now let us turn to insurers for a minute. And it's fair to say insurers clearly have a role to play in all of this, and they need to step up the game in educating policymakers and government officials on the specificities of insurance, support risk awareness and financial literacy initiatives, but also deliver easy to understand products that serve people's needs in a cost-efficient way. Now, with those key messages of the paper freshly in mind, I would like to turn to our terrific panel to further explore some of the issues from the report, but also possible solutions. Now, I'm not sure whether we manage to completely close global protection gaps in the next 45 minutes or so, but I'm sure that this panel will have great insights that will get us far in thinking about those issues. So let me first introduce the panelists to you. First is Hannah Grant. And Hannah is the head of the Secretariat at the Access to Insurance Initiative, or A2II. And in this capacity, she manages a team working with insurance supervisors to build an enabling environment for greater financial inclusion. Before joining A2II, Hannah worked at Insurance Europe as head of international affairs and reinsurers. Hannah, it is a pleasure to have you here with us. Thank you for joining. And then we have Corneille Karekezi. And Corneille is the chairman of Africa Re, vice chairman of Africa Re Takaful Company, and a member of the executive committee of the African Insurance Organization. Corneille has made an impressive career in the insurance industry, including as CEO of Sonarwa, the leading insurance company in Rwanda, and served in a variety of roles in the industry before. Corneille, thank you for joining us today. Next, we have Sang Le. Sang is CEO of Manulife Vietnam and has over 30 years experience in the life insurance and asset management industries and brings a wealth of emerging market experience to this panel. And it is fair to say that Sang is passionate about closing the protection gap and improving the life insurance penetration rate. Sang, thank you for being with us. It's great to have you here.
Xin chào.
And last but not least, Bill Marcoux. Bill is chair of the Insurance Development Forum Working Group on Law, Regulation and Resilience Policies, and is a member of the IDF Operating Committee. Bill is also co-founder of WCM Advisory, and previously he was a global head of DLA Piper's corporate insurance practice. And last but not least, Bill is a co-author of this report. So Bill, thank you very much for joining in today. And with that, I suggest that we directly dive into the first question for our panel today. An important key message of the paper is around the benefits of insurance regulators having an insurance market development mandate. And as the paper has shown, where in existence, insurance market development mandates are interpreted very differently. In some markets, there is the fear that mandating regulators and supervisors with a market development mandate will go at the expense of other supervisory mandates, such as we already heard policyholder protection or financial stability to a certain extent. Now, Hannah, in your work for A2II, you have worked closely with the regulatory community in emerging economies. How do you see the insurance market development mandate? And is there a trend towards more authorities getting this mandate in addition to their existing mandates?
Thank you, Dennis, and hello to everybody. So yeah, insurance supervisors' main priorities and key mandates have always been consumer protection and financial stability. However, in recent years, we've definitely detected a trend in emerging markets and developing economies, particularly of insurance supervisors taking on a market development mandate. Actually, there was a paper, I don't know if people have seen, but published by the IAS last week. It was by their Market Conduct Working Group, and it included results of a survey conducted with supervisors in early 2021. And the survey actually included a question on supervisory mandates. And the results showed that half, I think it was like 55% of respondents had an explicit supervisory mandate for financial inclusion. However, actually, if you look at the countries, I mean, it shows you in the appendix, we responded on the question. You can see that when you're looking at emerging market and developing economy countries, it's actually almost 90% of them now actually have a financial inclusion mandate. And this is a huge contrast actually to the situation 10 years ago, when very few supervisory authorities had such a mandate. However, and I think this is also a point that you make in your paper, that even if supervisors do have this mandate, it doesn't always mean that supervisors have the capacity or the resources to pursue sort of market development initiatives or the tools to monitor their impact in this area.
Thanks, Hannah. And it's great to hear that actually 90% of supervisors in emerging markets do now have that mandate. And I think I want to zoom in a little bit more into that. And Bill, during the interviews, we noticed that in some countries, market development is perceived as developing products for the poor. And there are a variety of other interpretations out there as well. In your work for the Insurance Development Forum, development is your bread and butter, so to speak. What does market development mandate entail in your view?
Thank you, Dennis. And as we kick off, let me also say how much the IDF has appreciated the collaboration with the Geneva Association on this report. It really was terrific to work with the GA team, and you pulled together some interesting things, I think. So that was terrific and greatly appreciated. You know, this is a really critical topic, and like many topics, the vocabulary matters when we talk about, you know, what is market development, and then what are the components of it. And in my few comments here, they will focus on what market development means for insurance regulators. And I think, you know, one way to address this topic is for us and for the regulators to think, well, how would we define success? What does it look like if we did a good job at market development? Is it just that the market is financially secure? There are few, if any, insolvencies. Market conduct is appropriate. Insurers treat their customers fairly. Those are critically important components, as Hannah you noted, and I think those are the cornerstone of virtually every regulatory system. But I believe, and the IDF is certainly focused on this, that that mandate is properly broader, and it goes to issues, and hence how you would define success. Are more people covered, protected from the risks that they face? Are they smarter insurance buyers? Is there sufficient capacity and expertise in our market to deliver the products and the risk capacity that the market needs? And it's those types of things. I do think it's important to note that financial inclusion is part of this. And again, that is an important theme throughout every economy, and is important. But financial inclusion is, I think in most people's mind, is indeed at the very lower end of the economic spectrum, having more people, having some insurance protection. Again, that is vital. But throughout the economies, and again, the IDF is focused on emerging and developing economies, so let's just talk about those, although I want to note that it's an issue for mature markets as well. But that getting, small businesses covered, even people higher up the economic chain are often, severely uninsured. But tackling that issue and then asking ourselves 1 year down the road, 2 years down the road, 5 years down the road, are more parts of our economy covered, protected, using the insurance services as they should, and that would be success or not. And I think from that, people can see, well, what should I do to help advance that? Thanks.
Bill, fantastic. So if I listen to you well, it's about how do you measure success, and we need to define that, and that could be done in sort of looking into how, whether more people are indeed insured, and not just looking at the penetration rate, as I think we've been doing in the past. Now let us get the perspectives from Africa and from Asia on this. Corneille and Sang, you are heading reinsurance companies on the African continent and in Asia. And reflecting on the points made by Bill and Hannah, what is your take on the way your regulators and supervisors are actually taking on board the insurance market development mandate? Do you see wealthy, varying ways of doing this? Are there success stories, or are there things that can be done better? So let us start with Corneille.
Thank you, Dennis, and let me also congratulate Geneva Association and the Insurance Development Forum to come up with this paper, which is timely and refreshing. In Africa, we certainly need market development for different reasons, where the insurance penetration is the lowest at the moment. So there is room for improvement, and we have seen different initiatives and efforts, although the insurance market development in some of the jurisdictions in Africa, it's not a clearly stated and defined objective of the insurance regulators. However, we have seen more and more in the publication of insurance regulators data and information indicating that they have that in the back, especially the number of individuals insured, and obviously new policies which are covered by the insurance market. So in the way it should be defined, discussing what Bill has already mentioned, there should be those statistics, not only the premium, and not only the insurance penetration rate, but really the effectiveness, the number of people who are covered individually or business, and also that indicates the size of the huge chunk of informal businesses, and also informal traditional ways, networks of solidarity in our countries in Africa, how they are taken up by the informal insurance. So this should be tracked, and I think also the insurance industry players should be given more voice to rate the efforts which are made by the insurance regulator towards that effort, especially their flexibility and understanding when it comes to innovation, when it comes to collaboration and listening. The private sector, the insurance industry players, on how they think things should be run, and also what are the objectives the entire industry has. Regulators on the continent have done their best recently in defining and sponsoring laws to to develop, to promote, to increase the insurance market size and also improve its functioning. But the will and ability to enforce the existing laws has been a challenge, as highlighted by the paper. And that's why I'm saying that I think the players, the beneficiary of the insurance regulator, the insurance regulation supervisory, when it comes to insurance market development, should have a say, a kind of rating, so that that partnership, which is much needed, can be put in effect. Thank you very much.
Thank you, Corneille. And I think this is very insightful. Insurers should have a say, and that also, I guess, highlights the importance of close connections and collaborations between the different stakeholders around the table here. Let us now move to Sang to get an Asian perspective on all of this. How do you see, and particularly diving into the point made by Corneille, the interaction between the insurance industry and the public policy and regulatory community?
Yeah, thanks, Dennis. Again, I'd like to reiterate the importance of the paper. It was well read and very informative. Thank you for Geneva Association with IDF. Vietnam and the emerging markets in Asia are exciting markets. Regulations have been, developed for a long time now, and the growth of the market, especially for a company like Manulife that's spread out through Asia, it's enormous. So we're getting a lot of big, good business momentum here. For specific to Vietnam, the market is growing very fast. There are a lot of opportunities. I believe that just whether you're a foreign insurer or a local insurer, the growth opportunities are there. And in the past 5 years, you could see how much the insurance penetration has increased. It's still low. I believe that it's between 2% and 3% from the official data. So there's a lot of room to improve. One area where I could see there's good sponsorship from the government is if we date back to 2019, when there was a Prime Minister's decision circular that specifically aimed at ensuring the restructuring of the Vietnam stock market and the insurance market by 2020. That was put in, and the whole idea was that they would support the development from the various regulators, policymakers, to ensure that Vietnam experiences an increase in the ownership of life insurance. So that's one big development, and that continues to press our industry. And a very positive development was the insurance business law. After 20 plus years, has now been revised, and a new law has been launched, and that was just last month on June 16th. After 2 years of preparation and various deliberations, and all the way up to the final discussions with the National Assembly. So we're really excited with this new business law. We fully support the ministry here and the Insurance Supervisor Authority to focus on the insurance business law launch, as well as supporting on the various guidelines and circulars that will go out to give guidance to insurance companies. So it's a very comprehensive, list of changes that I believe that all industry participants, and also probably getting a lot of support from even external to go ahead and implement. So we're really excited about it, and I think it does address the whole market development, because inside the insurance business law there are very unique aspects of that.
Thank you, Sang, and I think these are good messages coming out of Vietnam. And I think I just see a question coming in the Q&A addressed to you about the new regulations and the cap on premium rates that might be imposed on life insurers. Could you maybe elaborate on that very briefly before we go to our next theme?
Yes, and those regulations and being put out, it is really up to the practitioners of the insurance companies to comply. and that we are getting clarification notes on how best to adopt to that. But these measures are no different from what you see in developing insurance markets. And so we are looking closely at it and also working with other insurers to ensure that we all have a common understanding in a level playing field, how best to adapt to that regulation.
Thank you, Sang. So let us move on to our next big theme, which is the lack of prioritization of insurance on the level of policymakers. Now, in emerging markets, there frequently is a lack of prioritization of insurance, or understanding, I should say, of how insurance can help making societies more resilient at the end of policymakers. And this, in turn, leads to delays in regulatory reforms, very often to understaffing and under-resourcing of the regulatory and supervisory bodies, but also weak enforcement of existing regulation. Now, one of the paper's recommendations is that the industry and regulators need to work more closely with the government, and we heard it just before from our panel, to enhance their understanding of the role of insurance in their societies. But very often this is easier said than actually done. Corneille, I remember during a conversation we had in the context of this paper, you indicated that there should be an understanding at political level and governmental level that insurance can actually help with societal risk management and increase the resilience of communities. So if I interpret this freely, insurance should be seen as part of the puzzle in solving some of the urgent public policy and societal challenges. Now, when reflecting on your experience on the African continent, what is the biggest challenge in actually getting insurance onto the minds of policymakers or governments more generally?
Thank you, Dennis. You are correct. I have worked in many African countries as an insurer, as a chair of national insurance associations, and member of the Insurance Supervisory Authority body, and then today as an insurer. I have actually experienced firsthand the reluctance of the political authorities to believe that the insurance community means well for the countries and not for only their profit. There is that always conflict in terms of discussion, and I believe that to bring the important role of insurance for societies to the front of key decision makers, the insurance community should work collectively in a well-coordinated manner with sufficient funding and an effective strategy to explain their role in the economies and societies with a compelling, rational, and irrefutable narrative. Sometimes I feel like we insurers, insurance industry, we are sorry that the political decision makers cannot understand why we are important to our economies and societies. And we seems not to find the best way to convey our message, which we believe it's a genuine and true and important message for the societies in which we operate. Our solution proposal to the management of the risk faced by individual businesses and economies must be a complete, well-studied, and compelling in terms of its narrative. It must clarify and explain in a greater details, however, with a very good strategy, the issues of exposures, funding, capacity, and capability of the private, public-private people partnership. Perhaps we will need to devote more financial means to that exercise than before, and also do a lot of advocacy. Thank you very much.
Thank you, Corneille. So I hear that we as insurers, we need to work on the narrative of the value proposition of insurance and make that clearer and communicate better on that. Sang, let me turn to you and see what is your experience in this regard. And is there indeed also in your region of the world a need for insurance to better explain their value proposition to make the bridge to policymakers and their understanding of insurance.
Yeah, I've got a great example to share with you that Manulife does to bring the awareness of insurance up and share the findings with various stakeholders in our business. We run an annual Asia Care survey that covers 8 markets, including the emerging markets and Vietnam. And it was a good timely one because we just did it in November of 2021, and that includes a lot of the concerns that the respondents, over 8,000, have talked to on especially experiencing the pandemic. And it addresses 3 areas: changing habits of health. I mean that there are more people obviously would improve to change their habits to improve their health. There's also rising awareness of what mental illness can do. And then third area, which is very key, is the changing landscape of financial health and the many challenges that the pandemic has brought up. So in the survey, it comes out that 91% of the respondents between 25 and the 40 age that we took, 91% that they would either buy a new one or add to their current insurance program in the next 12 months. That's a big impact right there. That just means that the demand for our life and health insurance in the Vietnam market has risen tremendously. And then a lot of the respondents, and particularly because we've addressed the younger population. And actually, Vietnam is actually rather young, right? I think average age is like early 30s. So when we've asked them, they agreed that they would like to get a simple, approachable online product that they can get access to online. So there's a lot of work that we as insurers need to do to make sure that we can have that available. Because if you look at products that we have, majority are actually quite complicated, and with the documentations that are even confusing to myself after 30 years, right? And we need to continue to work on simplifying, so more and more people can get access to it. So that's the example of what we do as a company. We run this survey, and I will be having a chance to present this to the group of insurers under the Association of Insurance Vietnam, and then we will have our regulators also to be present there, and it would be great for us to share the results of the Asia Care survey, which directly addresses the demand that's coming from the society.
Sounds fantastic. So if I hear you well, insurers need to work on simplifying their products and making their products accessible online. And I think you've been doing a great job on that in Vietnam. And I think we will get to digitalization later on in our discussion here. But let me briefly turn to Bill and Hannah. I mean, you have been working close with governments and regulators in many countries in scope of this paper. What is your take on this sort of the lack of understanding or appreciation of the role of insurance and this value proposition? So Hannah, let me start with you.
Sure. Maybe, I just start by agreeing how important it is to get government support. I think we've definitely seen in the countries where HY has worked, where the government has maybe put insurance in their national financial inclusion strategy, or maybe the agricultural ministry has turned to the insurance supervisor. We very often then see the start of a microinsurance regulation, or the supervisor asking us questions about parametric insurance. So we do see a very direct, let's say, causal chain. I think I'd agree with what Corneille was saying about how we need to, work together as an industry in terms of how we approach policymakers in the government, but also how we need to say a bit more about what the impact of insurance is, so they have a better understanding and appreciation, I think, of what insurance does. And here I would actually turn to the Sustainable Development Goals. I think, governments all around the world have committed to meeting the Sustainable Development Goals. And I think we have to sort of speak, let's say, policymakers' language. So we need to sort of talk in their terms in some ways. So how do we meet? How does the insurance sector meet the Sustainable Development Goals? And I think if policymakers see it in this way, it'll help them appreciate better the role the insurance sector plays. And I think data and evidence is absolutely critical. I mean, to this, the less data that's available, the smaller the pool of evidence, and then the less decision makers are able to grasp the impact of insurance on development goals. It's, I guess, a bit of a vicious cycle, but I think we need to break that by sort of collecting sort of better data to really show the impact. And on this note, actually, the A2I has developed some key performance indicators aimed at supervisors to help them collect data to show the impact of insurance on the different SDGs. And I'm also aware of industry initiatives under the way under the leadership of UNEP FI. So I think we need to put these sort of efforts together. I mean, not to duplicate, to make sure we collect it together, and then as an industry to speak with one voice on the topic.
Excellent. Thank you very much, Hannah. Measuring the impact is the key word I take away from you. Now, Bill, let me turn to you for an audience question from Steve Simchak. And he writes, often governments say they want to develop their insurance sector, but then embrace protectionist policies that prohibit or discourage global groups from supporting that development. Why is there such a significant disconnect? And do insurance regulators and international organizations need to better explain the importance of global risk diversification? Over to you, Bill.
Thanks, Dennis, and thanks, Steve, for a very pertinent question. It is true. We see, and actually it's slightly alarming. There's probably been a trend over the last 10 years of greater barriers in some countries. Not many have gone the other direction, but we do see this increasing. You could say it's protectionism of the markets. I think the motives, though, are not sinister. They're driven by the flip side of this market development, which is how do we develop a domestic market that we are going to be able to be self-sufficient to provide for our country, not to be reliant on outside capital if we do not need to be there. And so I think the motivation has to be acknowledged, but then addressed, because the plain fact is that the capital base, but equally the underwriting expertise, the technological expertise to deliver indeed simpler products are often far more developed in markets outside of one's domestic market. And so it's harnessing the both, and it's a balance. How do we develop a domestic market, but how do we, if you go back to my very first comments about defining success, how do we cover more risks in this country? And if that's the goal, end goal, then I think that would lead naturally to, we want to have markets that are reasonably opened. There has to be proper licensing and supervision, certainly, but I think we find that markets that are more engaged, more competitive, actually deliver better products at a better price, for their customers. But I do want to say that I think the comments by all the panelists leading up here about the engagement with governments more broadly is so important. And that's a conversation that needs to take place between insurance regulators and supervisors with their government counterparts, ministries of finance and others. But then the insurance industry needs to engage with that. And I think, Corneille, in saying you've talked about what you've seen in your markets, that is the industry engaging. And I think the bottom line is, it's pretty basic, but I think it's really important. There has to be engagement. There has to be conversation. We have to, whether you're a regulator or an industry, assemble the evidence, exactly what Hannah said, and partly the evidence is not there, so let's create it, but assemble the evidence of what insurance does. And then finally, I think we need to come to the government officials with some proposed solutions. It's not a theoretical discussion, but coming to them with, if you believe in what the risk, management and risk financing function of insurance can be, here are some solutions that are market specific. And I think those are the things that are just going to stimulate conversation, hopefully stimulate further awareness among the population. As Sang just said, young people in particular realizing we have exposures and we want to be able to, to address those. So broad-based initiatives in that direction, but it comes back to Steve's comment as well. You need open and competitive markets. Thanks.
Excellent, thank you, Bill. And let me take this as an opportunity to ask Corneille a question on on market access barriers as well, as being an important reinsurer on the African continent. What is your take on that? And yeah, could you elaborate a bit on that point before we move on to our financial literacy topic?
All right, thank you very much. So it's an important issue, especially in a continent which is very fragmented with different laws, then different regulators and competing interests in terms of keeping insurance premium in those markets. So it is believed first by political decision makers that when insurance premiums are kept in a market, they also contribute to provide fundings, especially long-term funding to those insurances, to those economies, sorry. But also on the other side, the private sector of this given insurance market, they tend also to influence political decision makers to promote laws and other formal or informal barriers which will allow them to grow. So we have responded to that by advising different players that yes, it's an objective which can be pursued, but it must be checked and balanced in terms of making sure that the exposures which the industry or the country is accepting or taking are not overwhelming to their financials, and also they should not forget the benefit of internationalization or diversification of the risks. So it has been an ongoing discussion, and we have seen different political stances. Let me take just one example of Angola. Recently, Angola has been over 13 years discussing if they have to create a national insurance company called Angolan Insurance Corporation. And after more than 13 years, they have decided that they do not have necessarily to have it. So we have looked at examples. We take South Africa, which is the biggest insurance and reinsurance market on the continent. It doesn't have a national insurer, and it's doing well. All the risks are covered, and a lot of supply of capital and expertise is coming into the market. And you can take another example at the extreme level, where a country like Ethiopia, for example, doesn't even allow shareholding of a non-national individual or company. So if you look at both, the success in terms of insurance penetration or the success in terms of insurance density, whichever metric you take, you will see that it's South Africa which is doing better. However, it all depends on a lot of issues like circumstances. So we may say that Ethiopia, for example, to keep opening its market, it requires a lot of reforms, not only in the insurance sector, but in many other ancillary sectors of the economy. So it's not something which is you tend to see that where they promote things, politics like local content in many industries, so they tend also to extend it to insurance. So it can be in oil and industry, then in banking sector, then insurance, and so on and so forth. But however, I think we have been preaching the balance and also the diversification to have it in mind. And also the services the population is receiving, it should be a better one, not only localized or domesticated. Thank you very much.
Thank you, Corneille. That was an excellent, very insightful response. Now, in the interest of time, I would like to pivot to another very important topic, which is financial literacy. And Corneille, I'm staying with you for another few minutes. And our study reveals that financial literacy is a problem on the African continent. among others, but also that there are only very few examples of where governments and the industry work together to improve literacy. Could you maybe elaborate on sort of why you think this is and what can be done about it?
Financial literacy or illiteracy has been identified as a barrier to a lot of developmental goals, whether it is in insurance, whether it is in financing of activities, of financial activities, whether it is in taxation and other areas. So it seems that it's not really taken seriously, and the efforts, which wherever they are not sufficient, and they are short-lived and probably underfunded. Most of the initiatives are supported by international organizations to develop the financial literacy. And in terms of education in schools, for example, it is almost something which is inexistent. So financial literacy and its outcome, which is financial inclusion, on which insurance, a viable and a vibrant insurance sector can be built on, must be an effort of all times. It must be a deliberate and sustained one for many years. So governments have really the role, or they must improve education. They must contribute to awareness. They must introduce some compulsory insurance schemes where necessary, and probably with the tax incentives and so on and so forth. While regulators should promote and support initiatives which are aiming at developing awareness and risk literacy. For insurers, I think that we have been talking about transparent and simple sales campaign, which are easy to understand. I think that with digitalization and other efforts towards simplification of products can help, especially in the lower income population sector. And also, finally, the industry-wide and collaborative efforts to increase funding. I think often this not important but not easy to implement kind of literacy, which may take longer time. It tends to be underfunded and neglected, and apparently no one wants to take up that effort. So I think there should be really engagement in terms of putting in place again plans, strategies, which can be monitored effectively. Thank you.
Thank you, Corneille. Let me move to you, Sang, to get an Asian perspective or a Vietnamese perspective on this. So low risk awareness and financial literacy is a critical demand side barrier in emerging markets. What is your experience in this regard in the markets that you're active in or have worked in the past before your life in Vietnam? And what is the role of insurers, regulators, and policymakers in lifting financial literacy or insurance literacy or risk awareness?
Yes, I'll address close to home on Vietnam, and I think that would be a good representation of the emerging markets. Vietnam, with a population of nearly 100 million, overall, we would be one of the countries that have a lower level of financial literacy, and it is actually a barrier to getting increase in the insurance demand. And so essentially, without the increase in literacy, what we have is consumers don't have the formal tools or understanding to manage and mitigate risk that makes them vulnerable to things like disasters, diseases, incidents, and really to where you can use really insurance and protection coverage to mitigate financial losses. The irony is that we have 32 non-life insurance companies, 18 life insurance companies, 19 brokers, registered brokers, and 2 reinsurance companies. So while it's, and you can just see, and all of the companies here are growing rapidly. So while they're still under penetration, the market is opening up and the development is happening at the same time. So it's like, really quickly moving market. And so if you look at like one particular area, like health insurance, okay, in health insurance, and with the benefits that are created for tailor-made for Vietnam, what we find is that there is a lot of overutilization of benefits, and especially with items that really don't require, as far as we see, serious enough to garner a hospitalization. So when we read that, I can say that, okay, well, the benefits there, you can use it. But honestly, really, it's still in a development phase where people's understanding is that, you can just get insurance to get whatever coverage, what's most immediate. So it's designed that way, but really, that's not sustainable, right? So we have to make sure that we also build products that have the right guardrails, that provide the right level of coverage, that it doesn't become like where a health insurance becomes a income replacement policy. So there's a lot of work to do on that front, and I think that it could start from really the ground level, where insurance and the need for protection coverage, it started at the school level, and also at the communities level. And there is going to be bigger need for ensuring that there are much more affordable, broader benefits coverage, especially related to, I believe, the hotspot would be on critical illnesses, rather than these illnesses that are not serious.
Thank you, Sang, and I think that is very, very insightful. And I see a lot needs to be done at school level, but there's also a lot going on within the industry. But I think there are things the industry can do itself as well to help make people help understand the products that are on the market, making them simpler, simplify them, and explain them better. I see there are questions coming in through the chat, and one question is on digitalization and supervision. We already talked a bit about digitalization of insurance products, and you gave a perfect example, Sang, in Vietnam. But the question is digitalization in supervision process of the insurance sector could also contribute a lot to developing the insurance sector, particularly market development. The person asking the question would appreciate if we could elaborate on the role of digitalization in the sector, considering the rapid technological advancement. And I think, if I understand this well, this is probably also a question about digitalization, on the end of supervisors partly. So let me also see, Hannah, what is your take on this question? Over to you.
Thanks, Dennis. And yeah, and I'm happy actually on this question to share the results of a survey that A2I did last year with insurance supervisors in Asia and Africa, sort of inquiring on the uptake, let's say, to start with a subtext so far. And what we found is that it's actually relatively limited, the usage of subtech or supervisory technology and supervision across most of Asia and Africa so far. Or let's say maybe a number of countries have it, but the level of sophistication of usage, maybe is more accurate to say, is quite limited. So it's used for the collection of data and sort of the returns, but it's not used so much in terms of actually analysis for prudential or market conduct purposes. So I think, in terms of using subtech at this point, in developing countries for the purposes of financial inclusion, I feel the technology isn't quite there yet, I think in most developing countries. But I think the potential it would hold for being able to sort of at a point in time have a better understanding of the value a consumer is maybe getting from their insurance products, I think in the future, holds a lot of hope. Because, and particularly on the market conduct side, I think the more that subtech, and it is going that way, includes also the ability to pick out sort of key performance indicators on the market conduct side, which gives a better impression of the quality of the insurance that people are getting. I think the better, and then the quicker that feedback and information can get to the supervisor to react to a situation, I think the better. So I think, let's say in the long run, I'm seeing it as positive development, but where we are now, particularly in emerging markets and developing economies, I think the level of sophistication isn't there for it to really be used in that way.
Thank you, Hannah, for addressing that question. I think this is also a nice pivot to look a bit at price and product regulation and how that affects innovation. So we've talked a lot about policymakers so far, but I think we should also focus a bit on what can be done at the end of insurance regulators and supervisors as they play an important role in market development. Now, we've seen in the paper that many insurers are extremely eager to innovate and to respond to market demands swiftly. And very often, initiatives are delayed by complex and lengthy product approval processes. Now, Sang, I understood that your vision is to build Manulife into the premier digital and customer-centric life insurance company in Vietnam. And during our conversations, we were talking about the importance of innovation and the complexities to get innovative products approved in some of the markets, not least digital products. And we talked about many different applications in the life and health space, they're not least Vitality. So the question to you is, what needs to change in the regulatory processes for insurers to actually step up in innovation, to become more innovative?
Sure, Dennis. Let me share some good news. And this I should have highlighted when I mentioned the new IBL, Insurance Business Law. So, regulation is being amended so that for newer product approval processes, there's more autonomy to the insurance companies. So rather than getting every product approved, we are to register and request the regulator's approval of our life insurance and health product pricing and methodology. So once we do that, then we're going to have a lot more ability to create more innovative products. So we're looking to, obviously this is at the early stages. We know that there are regulations and also jurisdictions out there that already practice this. So Vietnam would be, the newest market to go into that direction. So we're really excited about that. Yeah, and in terms of if I were just to keep it basic for becoming the most digital customer-centric company. Now, the customer is at the center of digitization. Number one, it's important that we focus on enabling our customers to interact with the insurance company. I've been long enough in the industry to know what it was like when we first started off with very paper-based and quite archaic IT systems, policy admin systems that serviced our customers as well as our distributors. And we've come a long way, and we do need to continue to enable our customers to be at the center, where really the insurance benefits, not only the premiums paid, but also the benefits are at the tip of their fingers, without having to go through a puzzle of all types of wording and documents to even get a picture for it. So we really would need to enable our customers to be able to get a better glimpse of their own policies. I think the other area that's really going to help us is, insurance. Although we would love to have the breakthrough and have all of our products available only online where it's direct to customer, the reality is that many customers, for especially the longer term commitments and the more complex benefits, would like always to have an advisor giving them the advice, and where they get comfort in having not only to ask questions and have them answered sufficiently, because remember, these are long-term commitments. And life and health insurance products actually, the more they age, the more valuable it becomes, right? You buy this when you're younger, and really oftentimes it becomes so much more valuable to you as you age. And so we're really needing to enable our producers, our distributors, to have the right set of tools. So not only conducting financial means analysis, but also having them that they can explain much better, to the consumers at the onset of recommending the products.
That's great, Sang. And it seems to me that digitalization is not an aim in its own, but it should really all be about the interaction between the customer and the insurer. And also thank you for pointing to the great developments going on in that regard in Vietnam. But let me turn to Bill and Hannah, because in the discussions also around the pace with which products are approved in certain markets, where there is tight product regulation, the discussion always comes up that, well, we need to make sure we protect customers, right? So there seems to be a tension between, innovation and the speed with which innovation is happening on the one side and can happen, while making sure that whatever comes to the market is actually in the best interest of customers, and supervisors are actually doing their job to protect customers. So what about this tension? Is there a tension, Bill, and how can we address this tension?
Thanks, Dennis. And let me just say that the conversation we just had, we touched on so many important things in terms of development and the obligation, or what should be the priority of the industry, to focus on their customers, to develop products that are really fit for purpose, fit for the specific market, easily understood, and just building this level of trust really with the insurance industry. So just to highlight, I thought incredibly important discussion just now. But now you raise this one issue. It is one of the, I would say, not a contradiction, but competing priorities, proper priorities, but with many things in life. There are trade-offs that need to take place. And I do think wanting to emphasize, yes, the great importance for insurance supervisors, for the industry generally, to make sure that a market is financially secure, and from a market conduct standpoint, treating customers fairly, no deceptive, trade practices and others. And we've seen through many markets in many years, there are examples of where the industry, some players in the industry, have not acted appropriately. I do think from decades around this industry, that is a minority. It is but the impact on the market as a whole is significant. So there needs to be the proper level of conduct regulation. But then you get into the very complicated issue, quite frankly, of the costs and benefits of rate regulation, policy form regulation. We don't have time in this seminar to dive deeply into that, but I think in particularly rate regulation, we've seen in many cases where it may have begun to make sure that insurers charge enough that they don't give away the product and become financially unstable because of that. That's been the rationale in many jurisdictions for originally introducing rate regulation. But we quickly see in many areas where it is rate suppression, where insurers are not seeking to price gouge, they're seeking to price the product at their assessment of the risk. And if you have a very competitive marketplace, which, going back to our early discussion about market development, if you've got sufficient players, we all know, we've seen, insurers are ferociously competitive. They are going to sharpen their pencils, and they are going to offer products at the best price they can, still with the right profit component to stay in business. But I think that the market will set the price. And to cut to the chase, my view would be that rate regulation, I think, is rarely actually justified from a cost benefit standpoint, and should be eliminated. Product approval, again, the industry needs to have a broad objective of simplifying their products, making them better to be understood, not to comply with regulation, but as Sang said, so the policyholder understands what they're buying, understands their benefits. But yes, some product review should be there, but there's many ways of, do you need it prior approved before you bring it to the market? Is it a use? And then the regulators will look at it. And if it's objectionable, pull it from the market. If there's going to be a government review of it, it has to be prompt. It can't, and by that, it can't be 6 months. It certainly can't be a year. There has to be an ability. I know this gets to another issue of building the regulatory capacity to indeed deliver those products, have the right number of people, the right skilled people, but product approval, slowness of innovation because of regulatory requirements is a big impediment to the evolution of marketplaces, and so deserves even deeper conversation than we can have today. Thanks.
Excellent, Bill. Just looking at the time, we've got 4 or 5 minutes left, and I see there's a really good question coming in through the Q&A that I would like to address to Hannah. We talked already a bit about inclusivity, and the question is as follows: many of the emerging insurance markets face multi-level inefficiencies. How is it possible to encourage policymakers and regulators to incentivize the insurance market toward more inclusivity? Well, such markets are not serving their traditional market properly yet. Over to you, Hannah.
Thank you. Yeah, a tricky question. I mean, how do you go about encouraging inclusivity? I mean, here it's things like looking at the distribution channels that are allowed, maybe allowing a broader range of different distribution channels, maybe allowing a broader range of different types of institutions to become insurers. So these could be mutuals, cooperatives, community-based organizations. So a little bit of more flexibility, should we say, maybe in the prudential requirements. And then on the market conduct side, sometimes it's actually increased requirements that are needed because the consumer is a little bit more vulnerable. So it could be shorter claims periods, enhanced product disclosures. But the question was also asking, like, well, how does the supervisor move towards this when you're still sort of working on getting insurance of the general sector rights? I think there is, I mean, a general need for capacity building of regulators to sort of help improve the skills and things that are there. But I think, I mean, the two go together very closely. I think you can't sort of separate them. So I think as supervisors learn better how to think about different types of distribution channels, how to have appropriate regulation on the, let's say, the agent training or the what sort of channel is allowed. I think as they sort of think about this, at the same time, I think it should also improve conditions for the general insurance sector. And when you look at these countries and you look at what the majority of the population are and where they're sort of how much available funds they have, I'd say inclusive insurance is almost what's needed by the majority. So this is actually serving a huge share of the population.
Excellent, Hannah. So serving the majority would already do a lot for inclusivity, and I think that is a really good takeaway to pivot into our last question. We have a few more minutes left, and to be honest, I mean, the issues that we have identified in this paper, they have been around for quite some time, and the recommendations that we are making, they have been around for a while as well and do not necessarily come as a surprise. But how can it be that we, despite our awareness of those issues and possible solutions, we still see that there are, important protection gaps, and the issues are not really always tackled in a most efficient way? So to close off, I would like to give every one of you the opportunity to make a 1-minute closing statement addressing this question, or your wish. What would you like to see changed or to be done in the broadest term? So let me start with you, Hannah, and then we move to Sang and Corneille after.
Big question. I think what I would like to see is the increase in innovation. I think that's probably the key thing. It's needed. We need to change the paradigm if more people are to get protection. And I think this is already happening in a lot of markets, and I see insurance supervisors taking very positive steps to facilitate it through innovation hubs and sandboxes. And so I think that for me is key. Just we need to keep innovating and keep the dialogue going. Maybe that's the other thing to attach to it around it. So this innovation can really address the consumers and markets needs, but then the supervisor also feels comfortable with the innovation and it's not sort of slowed down in the approval or in the regulatory process.
Thank you, Hannah. Sang, what would you like to see?
Yeah, would like to see in the emerging markets and Vietnam in particular, where between companies and the regulator and the various ministries that impact our business, like the Ministry of Health, where we can have an open platform where data can be shared and analyzed. And it would give us a lot more confidence in pricing products that would be beneficial to all levels of the economy. So that, I know it's a broad statement that I made, and it requires a lot of work, but there are good examples of developed markets that already have established that. Thank you.
Thank you, Sang. Corneille, over to you.
I think it has been difficult to change dynamics in the marketplace due to many factors, but more importantly, two in the African context. One is maybe kind of a slow transition from traditional solidarity networks to formal type of risk management. And it could be maybe due to cultural and religious factors, which generally are hard to change over time. And what I would like to see, which can change the dynamics quickly, is the political will. Although I don't have a recipe of how to bring it to the front or to strengthen it. Why is it lacking political will? Probably that it requires often courage for new transformative initiatives. And for that, we can say that political will is not widespread because of fear of failure from the political players. If you take an example, in 2019, I think, the United Nations General Assembly unanimously adopted a political declaration on universal health coverage. Now, how do we achieve that? You'll find that few developing countries are resolutely and continuously investing in health services and insurance schemes because they require a lot of effort, a lot of awareness, and a lot of thinking in how to structure those schemes, fund them, manage them properly, and effectively deliver what they are promised. But some countries, like Rwanda, for example, which has attained 91% coverage of universal health, has demonstrated that the preponderant role played by political will can really change the dynamics. So we need more courage to try some initiatives, some ideas which have been implemented here and there across the globe, and try to adapt to our situation or situation of each country. And this is applicable to agricultural insurance. This is applicable to life. For example, saving is very low in low-income population on the continent. And there are tools to achieve that. There are examples. I think political will can really do a lot benefit to our industry and indeed to our economies. Thank you.
Thank you, Corneille. Bill, 30-second closing statement for your end.
Thanks, Dennis. I will be quick. Listen, my parting word is collaboration. It's what we need more of. There are great examples of it over the past several years, but this issue, the one you talked about, a protection gap that seems, we can't beat it. It grows in markets. It's been around for a long time. This is a complicated problem. There is, as you said, Dennis, at the beginning, no silver bullet. It's going to take a lot of players leaning in on this. That is supervisors, broadly governments, the industries, and others. But I believe that the key to success, the key to closing the protection gaps, is going to be increased collaboration around many of the findings that are in the paper that we've been focusing on. Those are all problems, they're all goals that everybody needs to add their resources and their capabilities to if we're going to close this. And it's vitally important. It's vitally important to the global economy. It's vitally important to local economies and livelihoods. So hopefully we've touched upon some things today and stimulated some thoughts of action. Thank you.
Excellent. Thank you, Bill. So we have come to the end of this webinar, and from the interesting panel discussion, I take away that the solutions to this are multifaceted. I mean, there's no silver bullet, as Bill nicely repeated, but you know, closing protection gaps and making sure insurance markets develop need innovation, collaboration, but also dialogue among the different stakeholders. Political will, I think, is an important aspect here that is sometimes lacking. And more practical, I think, an open platform, as Sang, as you mentioned, between insurers, regulators, and governments or ministries on you know, sharing data that helps with pricing products is important. So again, there is a lot that can be done by the different stakeholders here. So Hannah, Corneille, Sang, and Bill, many thanks to you for joining this fantastic panel and for the great discussion that we just had. And last but not least, I would like to thank our audience for tuning in today. So thank you all very much. And the full report can be downloaded from the websites of the Geneva Association and the IDF. So please take a look at it. And again, thank you so much for joining in. Bye-bye, everyone.
Thank you.
Bye, everyone. Thank you.